HDFC is in focus on account of the reduction in home loan rates. We're here to talk about the outlook on property prices, loan growth focus, as well as what the update is on the HDFC Max Life merger. None other than Mr. Keki Mistry, who's the Vice Chairman and Managing Director of HDFC, now joins us on the show. Thank you for being with us on ET Now. Mr. Mistry, I want to start off by talking about the home loan rates, which have been cut in the 30 lakh bucket by about 15 basis points for women borrowers and 10 basis points for other borrowers. Can you tell us, how do you see the rate cut impacting demand for loans?
See, the reduction in interest rates is really a function of a reduction in the cost of borrowing. So it's got nothing to do with, with markets or anything of that sort. That's number one. And number two, the incentives that have been provided by the government to encourage people to buy houses, the CLSS scheme, the various other initiatives that the government has taken, I think all of this is now benefiting not people who are in the weaker section, but also middle income people. So if you look at one of the schemes, the CLSS scheme that they have, the subsidy scheme that they have, there are three subsidy schemes, one applicable to the lower middle class, one applicable and two applicable to the middle class. So I will give you details of the one which is applicable to the middle class, and that helps the common man, to help people like normal people working in offices. So if you do not own a property at the time of applying for a loan or buying a house, and you are therefore and your income is less than 150,000 rupees a month, or 1.8 million rupees a year, and your the size of the dwelling unit that you're buying, the apartment that you're buying, is less than 110 square meters. If these three conditions are satisfied, then irrespective of the size of the loan or the amount of the loan, or irrespective of the value of the property, there will be a 3% subsidy that will be provided by the government for the life of the loan, and up to 1.2 million rupees of the loan. So up to 12 lakhs of the loan amount will qualify for this 3% subsidy. And this subsidy amount, discounted to its present value, will be paid up front. So effectively what this does is it discounts the cost of buying a house. So in my view, this is really truly the best time to buy a house. One, because interest rates are as low as they're ever going to get. Secondly, property prices have not increased in recent times, so effectively there has been a prime correction of prices. And thirdly, most importantly, now there is a subsidy scheme which is available only up to 31st December 2017.
Okay, best time to purchase a house. Mr. Mistry, we also understand that the home loan rate cut is for new borrowers. Would there be any impact in terms of margins or spreads?
No, there will be no. So we've always guided towards a certain range in spreads. We always look at spreads and not margins, for reasons which we explain time and again, that margins is more a function of how you leverage the balance sheet. Spreads is specific to borrowing rate and lending rate, so we monitor our spreads very closely. We would believe that spreads will continue to remain in the range in which we've always guided, which is a range of 2.20 to 2.35.
And tell us, Mr. Mistry, how do you see loan growth both in the individual and the developer loan segment shaping up in the coming quarters?
See, we generally don't make any forward-looking statements. Having said that, we've always said that with a long-term view, and we don't want to guide towards what happens this quarter or next quarter. But with a long-term view, we are confident that given certain factors in the economy, growth in the demand for housing loans will continue to remain strong with a long-term view. The reason growth will remain strong, there are several reasons for that. The first is that the penetration of housing loans in India is extremely low. Mortgages in India are just 9% of our GDP compared to a much higher percentage in other countries. And secondly, according to me, the most important factor is that if you look at India, 60% of our population is less than 30 years of age. And unlike the Western, people do not buy a house when they're in their 30s. So the average age of a first-time home buyer in India is about 35 to 37 years of age. And with so many people today being at a younger age, all these people will progressively, over the next few years, 1, 3, 5, 7, 10 years, need housing and therefore housing loans.
You know, Mr. Mistry, competition is increasing in the housing loan segment. We have seen a lot of other banks as well cut their home loan rates. Do you think there is a case for further cut in home loans or rates, or is the rate cut more due to the lower cost of borrowing?
See, home loan rates are not being cut because of competition. Rates are being cut because of a reduction in cost of funds. Let me answer your question in two ways. One is when you talk of competition. For us, competition continues to be from the 3-4 large players like State Bank, ICICI, LIC, Axis, and not from many of the new entrants. So most of the new entrants that you see in the business are lending in a segment in which we do not generally lend. So their lending rates are typically much higher than what our lending rates are. So they are not really competition for us in that sense. Now, as far as, so that's the question of competition.
And, given that you operate in this space so closely, can you give us some sort of an indication that I'm sure a lot of investors want a little bit of clarity on? Any view on property prices in the segments and the regions that you operate in and where they could be headed?
Well, see, historically, we have seen that whenever there is, at the end of the day, property prices is a function of demand and supply. So if this is a good time to buy a property and because of that the demand for properties is high, and for whatever reason in any particular area the supply is less, then that can have the implication, or that can result in property prices going up a little bit in those locations. Now, you have to look at it specific to each part of the country. There are supplies also picking up a lot. So because even the demand is so high, if supply continues to rise, prices should remain more or less stable. But if supply was to slow down compared to demand, then yes, prices can go up.
And Mr. Mistry, how do you see interest rates in the economy? Do you think there's scope for further rate cuts by the RBI?
I personally don't think there is much scope for rates to go down. RBI has, if you read the language of any RBI statement, they seem to be, and rightly so, they seem to be reasonably worried about long-term views on inflation and things like that. And I think they need to, because if for whatever reason inflation in the economy was to start picking up, it looks benign today, but if that were to happen, then to pull it back becomes very, very difficult. So I don't think we should expect to see any rate cut from RBI in the near future.
And Mr. Mistry, before I let you go, can you update us on the HDFC Max Life merger? When you're seeing a regulatory nod, any indicative timelines would be fairly helpful.
Well, frankly, I don't know. It's before the regulators. We are awaiting approval from the regulators. We hope we will get approval. So, but beyond that, I have no further knowledge.